Good evening. This is the Elliott Wave Update for the NASDAQ 100 and the S&P 500 for Wednesday, January the 25th, 2023. The market continues to act in a very strange manner, as I'm sure many people are aware. And as several of you commented yesterday, you might have wanted to wait until after Microsoft delivered its figures, its earnings report, before changing my labeling. I really appreciate that. And as I said in last night's update, it would not surprise me that once I've made this change, that the market will tank tomorrow. And that's pretty much what it did. But notice what happened. So yesterday I had put on the labeling that we were in a C wave up, and to complete the intermediate wave 2, which I have felt for quite some time was already complete. In fact, I'll just kind of go out to the daily. Actually, I don't need to. I can actually go to the 4 hour, but here on the daily, right? Before I was talking that I may have to go to the alternate, which would force the primary wave A over to where intermediate wave 1 is. But then when I saw what was actually going on and what the possibilities were, I realized that the intermediate wave 2 could be the one that was not yet complete, because this certainly is not ending up as being more of a 5-wave cycle down. So that is still out there getting ready to begin and kick in and knock everybody's socks off, so to speak. What we got going on right now remains, I believe, that we're in that minor C wave up, and within it, now going back down to that hourly chart, pulling it open just a little bit so we can see. Actually, I want to see waves 1 and 2. So there is minute 1 of wave C, minute 2 of wave C, minute 3 of wave C, which was classic, was beautiful. And before you say anything, folks, and put it in the comment section, I am well aware that wave 4 overlaps wave 1. But I did go back, as I often do, just to confirm what I already know, is that R.N. Elliott himself said that when the analyst can exhaust all other possibilities against the rules, against the guidelines, that often the count as perceived is going to be the count that it is. And so while this is a sub-minute degree, it's not like I'm allowing on a cycle level or a primary level or an intermediate degree level or even a minor level, or for that matter, a minute level. It is a sub-minute within inside the minute third wave. And the balance of it does basically come into play. This third wave was very difficult, ended up being a triangle pattern within 3 of the 5, and these are very small. But we had a fairly solid one, a pretty clean 2, a sloppy as you can come up with third, a larger than expected 4th, and then again an extended wave 5 to complete this minute 3. Then we had thus far, it may still be in process, but thus far we had a very clean ABC down, smacked right into, on the NASDAQ, the hourly 200, held it, and then started to rally as the market got closer to Tesla's, Lam Research's, IBM. We had a lot of earnings flood into the market right there at the close today. The biggest that we've been watching, of course, would be Tesla. And Tesla, after being down, I could go look. Hopefully, I don't think, maybe let's check it out. The low today was 138. The stock had opened at 141, ran up to 146. The low was 138. So we were down about 3 or 4, and now the market is sailing up, and now we're up above. So there's another 2 points, about 2.5, or up at least 2 from the close. So wild move in Tesla. Earnings are out. They are what they are. Obviously, within the conference call, people are okay, traders are okay with what Tesla has to say and how or what and is going to happen going forward, or what the intent is, or what the forecast moving forward is. Initially, I was reading somewhere that they were discussing that the forward guidance probably wouldn't be that pretty. And to be honest with you, I'm like, okay, but we're not really seeing that. Let me just double check. Yeah, the conference call has already happened. And whether it's still in play, I don't think so. So in whatever, the actual earnings were not great. So the estimate, oh, actually, excuse me, I take that back. They were better than expected. I thought it was the other way around. The estimate was for 98 cents and the actual was $1.19. So the stock continued to rally, and I've seen it up as high as, I believe it was 147, 148. And now it is, get out of the way, 146.30 to 146.33. So right about 146.30 at the moment. So it's kind of gone up, come back, gone up. So again, those are out of the way. IBM, on the other hand, did not impress the market with its earnings. So they are ending up, they're down about 3.5 as we get ready for the Globex opening here in about 2 minutes. Lam Research reported, didn't like that one. The stock's down about $40 because that stock trades way into the stratosphere. And it trades, it got up to 499, trading now 472. So it's not quite, it's actually about $25, $28 from the high to where it is now. And it closed today at 488.40, up 90 cents. So it's about down $16 off of that, the close. Now, what Lamb's weighting is in the NASDAQ, I don't know. We can always go over and check, but right now, it truly doesn't make any difference because we spiked. We spiked back above 11,900 on Tesla's earnings. If you remember what I was saying last night during this whole process, that I would expect these spikes up in earnings to continue as these tech titans report. They may not stay up there. They may retrace all the way back, but I believe they will all push and spike on their earning report. So we still have Apple on this, February the 2nd. We have AMAT on the 16th. So they're a little bit late in the cycle. So we got them in a couple of weeks. We have AMD on the 31st. So next Tuesday. Amazon on next Thursday. And Boeing came out. Now that's the other surprise story, right? Boeing comes out and reports really kind of what I thought would be pretty dismal year end. And they did drop the stock. That's another one you might want to look at. Now, the Boeing is not in the NASDAQ, but it is in the S&P. So we'll be talking about that too. So the low today was 203. So it was down $11 and it's up 70 cents. Pretty amazing. Actually, pretty amazing to me. Okay, so Globex is now just opened. Yahoo, Mountain Dew, and here we go. So Dow down, S&P off 3, NASDAQ down $1. And that's the surprise. I mean, the NASDAQ's going to be down more. So this is because of IBM. IBM is not in the NASDAQ. Okay, so what do we got going on? I'm going to continue to look as I presented last night. I'm sticking to it. Although I did say a couple of times today, it's like I will switch on a dime if I have to, if they just kind of keep plowing it lower. Now, that note is not done yet. So in other words, this could be ABC A, not the whole 4, but just A of 4, this could be a B wave. This thing turns, heads down, gets down to the 3A2 support level, which is 11,530, we'll call it, and then does another rally up. Or it just turns and starts to head down in a much larger C wave. But see, this is pretty clean. I'm going to open that up so we can look inside just a little bit. It does look pretty clean, doesn't it? Got an A, a B, and then a 1, 2, 3, 4, 5. Right? Even if that does not necessarily all the 4. Maybe the 4 was only here, but we got that extra slide down to there, and then it boosted. Right now, 1, 2, 3, 4. Then we get a 5. It'll be 5 up. That would be maybe subminute wave 1 of minute wave 5. So again, I am going to take away the wave 4, and we want to look at what can we get for a wave 5. So once again, I'm going to put this over to there, bring everything back into focus here. So because what we're going to be looking at is the Fibonacci extensions, and we're looking at wave 3 as it would compare to wave 5. So even if it does the minimum, which is 0.618, it is projecting 12,382, 383. If we do the full Monty, we're way up here, 12,864. Again, going out to the daily chart, where can't it cross? As a wave 2, an intermediate degree, it cannot cross 13,756. So it certainly can get up here. I would not expect really much higher because that would put it pretty much in line with expectations. Wave C, or at wave 5, would be equal to wave 3. Now, let me add one more. And we're going to go look at a wave C in its total against the wave A. So we have Fibonacci relationships in that respect too. Let me get that into place. And we line up pretty much right here, 12,613 to 12,864, bing and a bing, where the wave C would be equal to wave A right there, 12,613, 786 right there as well for that 5th wave. So we're trying to wrap ourselves right around 12,600 actually. We have below 12,478, below that 12,400. And then we have 12,234, which the market did not test. That would be down here is what it got to yesterday. So we have quite a few levels, but essentially we would like to see it above 12,335, which was the high of wave A. And this certainly covers it all the way up. So our resistance zone, 12,360 to 12,512 to 12,613-ish. And that should then complete wave 5, and we then start to head down. Again, we continue to have late reporters, but interesting to see who might be left that we haven't looked at. Meta on Fed Day, and NVIDIA is late in the cycle. They're not until almost the end of February. And Tesla was today. I could go back and look because we also have Adobe, which can be a market mover. They haven't come out yet. AMD, we just looked at. Amazon, we looked at, which is next Thursday. So again, I know we have some other bigger players to report next Thursday. Google, Amazon. So we could get another spike, and that spike could carry us straight up to where we want to be. We're going to have to see and play it day by day. Again, I'm not saying that is where the market's going to go. I'm going to say if I use my Fibonacci against the Elliott count that I'm currently using, that would be the expectation of where the market could go. The market, of course, is going to let us know, here's what we're doing. So if indeed this all has to be flipped back and that high has to be what previously I was talking about. Right now, I don't see that. Right now, this looks like a pretty clean 3 down, with this coming back up what would have been that internal B wave, and looking like it could just continue to move higher. Here we have Tesla again back above 147. Once this stays open, which it is, I think it'll move itself back up. And then we get the rest of the world to come in and take a look to see how we did today and what they want to say. So again, if for tomorrow or overnight we turn and we start to head lower, I likely am going to look at it as A, B, and then a C wave. 382 comes in 11,467. That's just 382 of actually of what? That's a different fib. But I know we had 382, which is very close to that as well. If I'm just going to take this by itself on retracements. So let me get rid of that. And this one I'll leave up because now we just want to look at something for this. And I'm going to put up retracements. Let me put it up to here. So, yes, 382, 11,529. So if it came back down, 529, then we have 467. And actually, it could go, it should only be a wave 4. 382 should hold it. Should. So that would be an A, this could be a B, and then we get a C. Otherwise, this is the ABC labeling it 4, as I did. And that suggests that we continue to move higher. It's not going to be an easy trip. We are reaching the top. The signals are now starting to get scattered. And so it's going to become more difficult. Again, while the expectation would be for wave 5 to create a new high above wave 3, it is not required. It is the expectation. I've seen fifth waves fail, and then the market immediately does about face and just slides and slides and slides. Now, this would be a fairly sizable fail because we got up to what? 11, what was that high? 11,917. And this high was 12,010. So a good 90, 80, 83 to 83 points. Failure. Impossible? Not at all. It has been a wild and crazy market all the way up from this end of December low. It's been wild, crazy, and just push and push and push on several notes. Like we got earnings reports coming. We've got the Fed who's talking about that they might drop the rate again to how much they're going to raise to 25 basis points instead of 50 or 75. So we got a lot of stuff that they're going to build this on. We've got even people out there talking that the October low that was it. That's it. The market bottom right there. We're off to the races. Better start buying. And again, people do play into that. So no matter what, I am expecting another solid shoe to drop. And that would be in terms of that we're going to have another serious decline in bond prices. So I would expect the yields to shoot back up. We're looking for beyond 5%. That'll come over the weekend when I update the treasuries. But I am expecting it. But right now, the treasuries remain in a B wave, an ABC B wave counter trend rally. And I believe they're in the C wave. And so far, so good. I mean, they have their problems like the rest of the market, but it tends to fulfill the expectations. Let's quickly go over to the S&P and take a peek. Same story. there we have it. We have 1, 2, 3, 4. And again, same deal. I know, but I just don't see any other way that it's going to work, that this and this is overlap. But if you want to tell me about it's a forming diagonal, I do not see that. I do not see the diagonal. Remember, diagonal needs to form a triangle. That's what the diagonal is. It's forming a triangle as it pushes in one direction or the other. This is pushing higher. I don't see it forming a diagonal. Remember, it's called diagonal triangle. So I don't see that necessarily. Oh, so here in the S&P, 1, 2, 3, 4. Well, let's start over. We're going to put our fibs in as to what we think we should get to within this fifth wave, because now we have the fourth. Yesterday we didn't, so we did some estimates, but today we got the fourth. Now, 618, 4110. Okay, takes us above that level, takes us up to 41. That would work. That could fit. Let me go out one and see where this is the C wave. So we got our C wave here. Now let's see how, if we're getting this overlap. So these are the C wave. 4046 is 382. Let's see if we got anything up here. We got the 50% at 4126. So guess what? I think we got a little bit of a zone here, as we did yesterday when we were talking. 4110, 25, 30, 50. That should be enough to carry a fifth wave up, and then we would be done with the C wave, with the intermediate wave 2. And then we should start. There is enough going on in our own country with interest rates, with inflation versus inflation being dead. If it is, then we're going to start going into a period of deflation, et cetera, et cetera. But it doesn't seem to get anywhere. This will find a range and it'll stick to the range. Maybe the dollar sticking to a range. The bonds will be sticking to a range, et cetera, et cetera. The market sticking to a range. And it always seems to be waiting for something else. We're waiting for the Fed, then we're waiting for the next earnings, then we're waiting for the CPI and the PPI, and we're waiting for this. So it's a constant game of wait and see. And each time we get it, nothing seems to be completing of it. So we're sitting, and you can see it, inside this huge corrective pattern. In fact, it's all been ABCs. Because why? Because off of that all-time high, it has been a corrective pattern. Corrective patterns are counted ABC. And in each degree in operation, it's going to form the same pattern. ABC, ABC, and then A, B, C. So we got to do it on intermediate degree. We got to do it on primary degree. Then we have to do it on cycle degree. What's inside primary A? 3 waves of intermediate degree. What's inside primary B? 3 waves of intermediate degree. What's inside primary C? 5 waves of intermediate degree. Where are we? Well, unfortunately, I thought we were done with intermediate 2, but we're not. So we probably have intermediate 2 yet to go. Now, what are the moving averages here on the daily telling us? Interestingly enough, we got the market this morning or overnight dropped back below the 200 and got down and touched the 20. The 20 held, did not react, did not go flat, has turned higher, continuing to turn higher. What did the market do? Went all the way back, got above that, and closed yet again above the 200, which does remain flat. So the strength behind all of this is not enough to get that 200 to start turning in favor of this rally, continuing. So I believe that it's going to get stuck and it's going to end and then it's going to turn. Now, 4180 would be the ticket that we want to see it get above. But all I really need to do is to go over and look at the line chart, and you're going to see that that's the high, 40.94 on a closing basis. And I'm telling you, that could be the ticket. I've shown you this is how I use it to get really what's going on. And when Elliott did his original work, he was not counting extremes. Candles didn't exist. They were all line charts based on, there was the plot for that hour, there was the plot for the next hour, there was the plot for that hour, and then the patterns came second. So I go back to that original method. That would be the end of wave A. This whole thing would be the B wave. And now we're in the C wave up. So in essence, pure Elliott tells us that we need to get above 40.94. 41.10 to 41.30 to 41.50 certainly fills that ticket cleanly. If we have to stick with that and we're going to hold to that, I don't think it's going to happen. If it does, 42.01. 4,200 would come in next. Everyone's going to ask, how is it going to get up there? Well, we asked that, how did it get here? We asked that, how did it get here? Earnings. What did I say? It's going to spike. What did it do? It spiked. On the daily, it shows a spike. It's a big old hammer, but it showed a spike. So I'm going to continue to kind of hold out and let this all happen, because you saw today, oh, the negative. It stopped on a dime, and then it was like, buy it. What's to say that that isn't just the plan and it's going to carry out? Now, again, tomorrow, by the way, in case anybody has forgotten, we have, let this come up, we have a bunch of numbers. All of these are coming out at 8:30 a.m. Eastern. Durable goods, GDP, international trade in goods, jobless claims. Jobless claims, I'm a feeling, is going to come out inflationary. GDP, I don't know. Durable goods, again, I don't know. International trade in goods, those all could be like, okay, how are we doing as a country? You know, and what percentage of our debt to GDP? What is that ratio? What does that look like now? We'll find out. And we'll find out tomorrow morning. And I'm sure there'll be a lot to talk about amongst the pundits about how we're supposed to interpret all of that. I actually leave it up to the market. How do they want to interpret it? How do they want to see it? And they will definitely let us know one way or the other. They will let us know. So again, I am thinking this is a little bit cleaner in terms of this is an ABC. And the 4 can go there. It's not as clear over on the NASDAQ, but here it is, because you can see how high we've gotten again, and likely can continue. We're a lot closer to that high than we are to that low. So we got up to 39. That high is 40, 56, almost 57. And our first resistance is 40.82. We got 54. Don't get me wrong. We got 46, 54, then 40.82, and then we're up into the zone. We're up into the zone of completion. We can get that done. Maybe they hold this all together until we get to the Fed, which is next Wednesday, till we get to Apple, which is next Thursday, like some of these other big tight stocks come in next week. Maybe, but what's that mean? We're going to churn around in here, churn up, turn down, churn up, turn down. And it could be trading. Another reason why I'm a day trader. Again, today, plenty of beautiful moves. In fact, I basically was a scalper all day. Didn't even have to carry them all that long. And if you got your signals and you know where your entries are and you know what your targets are and you have your place where you're going to get out, employ them. Trade both sides. Trade it up, trade it down, trade it wherever it decides it wants to go. And you likely are going to have a successful day, keeping your rules in place and employing them. Don't give up on one. Don't walk away from one. Don't walk past one. The one that everybody usually walks past is the one where it's, where will you get out when your trade becomes invalidated? That's so important, because right now there is enough volatility, there is enough movement in the market that you can get out, take a review, what's going on. You may choose to go with the market for a little bit longer, or your next trade is going to be the same one you just got out of. But then the market's going to be telling you, we're ready to go and do it. These are the important things to remember. If the market's not ready to go where you believe it's going to go, doesn't mean that it won't happen. If your target or your trigger is valid enough and it gets triggered again, you take it. And then maybe then the market is ready to go. We can't control how people or firms move in and out of sell orders, buy orders, option orders, et cetera, et cetera. We already know that there's so much of that going on, and that is what affects our markets. That's what affects the S&P and the NASDAQ, how many of those stocks trade. And each time the stock trades, it recalculates the value of the S&P, the NASDAQ, the Dow, the Russell. All right, I'm going to end it right there. I'm going to wish everybody a really great trading day tomorrow, and the next update will be on Thursday, January the 26th.